Why do you work 8 hours a day?
but your money doesn't. If you're a Canadian and you're not using these 4 passive income accounts, you're wasting time and missing out on tax-free growth.
We're going to cover number 1, high interest savings account. Number 2, ETFs that act like savings accounts. Number 3, dividend portfolios. Number 4, and one of my favorites, covered calls. You'll also get a report card on each of these accounts, such as how much work is involved, how safe are they, and how much income can you really expect. Plus, I need to bust some passive income myths. Warning! This won't make you rich overnight, but it can help you build long-term wealth and ultimately live life on your terms. Hello, just in case you don't know me, my name is Tracy. I'm an ex-engineer turned full-time business owner and a mother of twins, and I share over 20 years of my experience investing in stocks, real estate, and building passive income in Canada. So let's dive in. Let's start with the easiest account any Canadian can open right now, the high interest savings account. This is like the vanilla ice cream of the passive income world. It's basic and always available. Now, there are a lot of mediocre savings accounts offering 1 to 2%, which is like boo. But platforms like Moomoo are offering a competitive 2% interest rate when you open a cash account in Canada. Bonus, once you open a cash account, they'll even throw in an introductory rate for new clients where you can get up to 6% per annum cash back over a period of 60 days. If you let your money just sit there for a whole year, that's equivalent to 2.66%, which is way better than other platforms like Wealthsimple or those boring banks where you seriously have to invest hundreds of thousands of dollars before you even get an equivalent rate. Here's the report card. Effort, super easy peasy. Safety, top-notch safety, because Moomoo, backed by CIPF, is insured up to $1 million. Amount of income, meh, but it's guaranteed. Learning curve, anyone can do this. Oops, I forgot to tell you, there's another passive income account you can open right now and make 50% return on investment. If you deposit $100 today into Moomoo to trade stocks, you can get $50 cash back. That's a 50% return on investment instantly. Click on the link below in my pinned comment. Now let's get back to the video. ETFs that act like savings accounts. This is really interesting because these are the stock market's equivalent to high interest savings accounts. How it works is that they park the money in Canadian savings accounts or bonds or a bit of both. Most importantly, they pay you interest on a monthly basis like cash.to, psa.to, HISA.to. Seeing is believing. So let's jump into ticker symbol cash.to so you can see it for yourself. So the dividend yield is 3.48%. And you see that it pays out frequency 12 times a year. So this is not some GIC where you have to wait like at least a year before you get paid out. You get paid interest payments on a monthly basis, which is huge. The top holdings are Canadian bank accounts, which is National Bank, Scotiabank, CIBC. Now you could also go into this platform, which I'm using the Moomoo app. It's really, really helpful because you could get so much information just with a click of a button. Let's jump into my report card. For effort, I would say it required little research. For safety, this is not guaranteed, but I would say super low risk because you can see the holdings are in savings accounts. Income, this is a bit better than your savings accounts. And as for ease, this is one click and you get to invest. Bonus, if you hold this in your TFSA, your tax-free savings account, all of that is tax-free. Let's do a quick reality check. The first two I just shared are pretty plain vanilla, but the next two, that's where compound growth and real passive income. Let's talk about building a dividend snowball for you, potentially tax-free. How it works is you invest in boring companies like banks, utilities, energy companies like TD Bank, Fortis, Enbridge. And just for holding onto these companies, they pay you every quarter. Now, over time, holding onto these companies and collecting the dividends, which is paying you money just for holding the shares. And if you use that money and reinvest and buy more shares of the same companies, the dividend snowball starts growing and growing. In my opinion, it's very close to a set it and forget it approach. Let's check into a real example. Let's go into Johnson & Johnson. As you can see, it has a super long history of paying dividends, 42 years, and it's incredibly reliable with a juicy dividend of 3.29%. For example, you can buy 400 shares of Johnson & Johnson and it pays you every quarter over $600 US.
But Tracy, how am I going to just buy 400 shares of Johnson & Johnson?
That's redonkulous. Now I get it. Not everyone could just own 400 shares of Johnson & Johnson. That's why I want to share 2 ways of doing it. The first way is you could invest just $500 a month. Very boring. Auto invest into Johnson & Johnson. $500, set and forget it for 35 years and put it into your registered retirement savings plan. And before you know it, you'll have an account over $1 million. And if you held it in your RRSP, you don't pay any withholding taxes. Of course, if you draw it, then obviously it gets taxed as income when you retire, but you'd be a much lower income tax rate anyway. Now, if you had done that for 35 years, fast forward, you would own over 8,900 shares of Johnson & Johnson, paying you more than $41,000 US per year. But maybe you don't even have $500 to invest. That's why I want to talk about this auto pay feature that's available on Moomoo. You can start with just 1 share, and the moment you deposit money into your account, it could be auto invested back into more shares. As Canadians, it's so painful to exchange your Canadians to US dollars because we get hit with so many ridiculous and expensive fees. But not right now, not anymore. I am so excited to share that Moomoo has the lowest exchange rates. This is my favorite platform to buy US stocks. For example, if you had $10,000 and you want to exchange $10,000 in Canadian to US dollars, it would cost you 1.5%. which is like $150. But now, if you did this on Moomoo, you take $10,000, you only pay 0.09% plus $2, which is $11. You literally save $139 using Moomoo. Now, my dear friend Adrian from Canadian T-shirt also says Moomoo is his favorite discount brokerage for buying US stocks. There really is no comparison in Canada. Now, here's my report card. As for effort, it's obviously more effort than a regular savings account or a savings ETF. So I have to give it a medium because you do need to do a bit of research to figure out what dividend stocks to buy. You obviously want to buy dividend stocks that have a long history of paying dividends. For safety, this is a bit higher. I put it medium because not only have to do research, but not all companies will pay dividends. So this is something you'll have to dive in and do your own due diligence. Now, as for income, it's about 3 to 6%. And as a rule of thumb, if you invest $300,000 into a dividend stock over time, you can expect about $12,000. As for ease, you do have to click a few more buttons, but it's seriously pretty easy. Smart tip, Canadian dividends in non-registered accounts, not in your RRSP, not in your RRSP, in a non-registered account can be tax free if you meet this tax bracket. More on that a little bit later. If you're ready to level up, let's talk about selling covered calls. This is how I rent out my stocks every single month and collect cash. It doesn't matter if it goes up, down, or sideways. How it works. Step 1, you sell a call option on a stock that you already own. Step 2, someone pays you cash for the chance to buy your stock at a certain price. Selling covered calls is like putting your $500,000 house up for sale, but only if someone's willing to pay you $1 million. You know it's a long shot, but here's the catch. Someone's willing to pay you just for putting that offer. If no one takes up the offer, you get to keep the cash and your house. But if someone wants to take up on the offer and buy your house for $1 million, you're forced to sell and give up potentially on future gains. Imagine having a $500,000 house 15 years ago in Vancouver. That's worth over $3 million right now. Covered call works the same way. You're collecting rent on the stocks you own, but there's a risk that you are forced to sell. Let's do a quick example. I'm curious, how much money could I collect on my AMD share? So if I sell one covered call for a price I'm willing to sell it at, and I'm going to choose a price that's probably pretty hard to reach. Typically, I choose 30 to 45 days out in the future. I'm going to choose $180 a share. In this example, I could earn between $116 to $120 in passive income just by selling covered call this week. If it doesn't get to $180 per share on AMD, I get to keep my stock and the cash. And the chances of success by selling this covered call is 93%. Over the past couple of years, I've tried many discount brokerages for selling options. And by far, my ultimate favorite is Moomoo. I had a very, very frustrating experience recently on Wealthsimple where I took the time to transfer my account to Wealthsimple thinking, of course, they allow options. Turns out there's significant restrictions with selling options on non-registered accounts in Wealthsimple. So for months, I couldn't sell covered calls and make cash. If you really want to level up, please choose the brokerage account very, very wisely. Moomoo is super competitive with their commissions. As you can see, it blows Wealthsimple out the water, blows Questrade out the water. Here's my report card. In terms of effort, I had to put medium because compared to like stuffing your cash into a savings account, which is just barely beating stuffing money under your mattress, it's a little bit more effort. In terms of safety, that really depends on the stock because you don't want a stock that goes up and down dramatically. You really want something that's predictable, stable. For income, if you're selling covered calls consistently every single month, you can expect 1 to 3%. So if you had a $100,000 account, you'd be making $1,000 per month. And that's pretty easy to do, or could go up to 3,000. Some people go even higher, but you'll take on more risk. Now, in terms of ease, once you learn it, there's a learning curve, but you can see it's actually quite easy to understand once you do it. As promised, let's bust some myths about passive income. You pay taxes on passive income. Did you know that we have the dividend tax credit where Canadians could essentially collect dividends tax-free? Pay zero taxes. Here's the magic of Canadian Dividend. If you earn eligible dividends from Canadian controlled companies in a non-registered account and your income tax bracket meets this up here, you could pay zero taxes. Fast forward in the future, you're an early retiree or part-time worker or student, and you held money in your tax-free savings account. Well, you can withdraw that money tax-free. If you collect no pension and you have a bunch of money in a non-registered account of Canadian eligible dividends from Canadian controlled companies, you could collect them tax-free. So essentially, you could collect a lot of money tax-free in Canada, as long as your income is low enough. And withdrawing cash from a tax-free savings account is not considered income. Myth number 2, you need a lot of money to start. Nope. You can start with $50 or $100 and plunk it into a high interest savings account, or better yet, buy one dividend company that pays you money just for holding on to that stock. Passive income is set it and forget it. No, okay? Passive income always includes work. It might be clicking buttons, it might be reading a couple pages, it might be reading a book, but it's never do nothing and get money. It's really less effort over time. Now, I want to just summarize it all for you. Take a screenshot of this image where I summarize the 4 passive income accounts. But I want to do another bonus of free money you can start today. If you want me to do a detailed video step-by-step on covered calls, a complete tutorial, comment below covered calls. If you want to make passive income, you gotta open an account right now because you could instantly make a 50% return on investment. If you open an account on Moomoo, deposit $100, you get $50 cash back plus commission-free trades for 60 days. If you deposit $5,000, you get $300 cash back. That's equivalent to 6% return on investment. And on top of all those rewards, if you transfer an account, well, you can get up to $2,300 just for moving your account over to Moomoo. Anyways, I really hope that you take up this generous offer, free money, because I'm already doing that. I'm transferring one of my accounts to Moomoo. Now, these are very generous offers, and I just really, really want you to make some extra passive income. It doesn't have to be on my link below. If you have a friend that has an account with Moomoo, ask for their link because they can make some extra money. Or if you don't know anyone who's on the Moomoo account and you're a new interested client, please click on the link below and get some free money. Starting with $100 and make 50% return on investment. Anyways, I hope to see you in the next video. Bye.